Afternoon, it's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the European markets for the trading session Tuesday, the 3rd of October 2017. Please be sure to visit Trade Signal, signals and market updates from leading providers at www.tradesignal.com. You can certainly download the app at the Google Play and the Apple App Store. Okay, so the rally continues, very, very impressive, even though the German markets are off today on a holiday. The actual European market still. Rest of Europe certainly is trading. European Day of German Unity apparently. Okay, so again, FTSE under 100 up, still very impressive. What a move on the FTSE 100, impressive. Okay, German DAX as well. Obviously he's off on holiday. We have the French CAC up 10 points. The FTSE MIB though, and the IBEX and the Stock 600 certainly coming under pressure, and I'll explain as to the reasons why. In terms of Asian markets overnight, you had the Hang Seng certainly all closing up an impressive 2 percentage points, just more than 2.25%. The Nikkei closing up 1 percentage point as well. Even with oil prices dropping as well, again, markets are not concerned. Stronger US data certainly helped propel US markets higher, and hence the reason why we're seeing this gap higher and the continued strength. Now, in terms of European markets, they have been subdued to a large extent from an economic data perspective. We've had UK construction, PMI construction, certainly coming in weaker than expected. Also, we've had European inflation numbers coming in stronger than expected, thereby obviously strengthening the argument for tapering, and therefore looking to potentially, strengthen the argument for tapering, and therefore looking to actually raise rates. Okay, and again, this is negative for European equities if you look at it from that perspective. So that's the argument that I'm looking at present, looking for weakness in terms of the actual market itself. Okay, so looking for a potential reversal in European equities now on the back of tapering concerns. Okay, also with regards to the FTSE certainly being into resistance as well. Weaker PMI data. We have the uncertainty regarding the Tory party conference, and we also have concerns with regards to weaker oil and obviously Brexit uncertainty as well. Okay, we are looking forward to FOMC, Fed Powell, basically speaking later on. A Red Book Index, ISM. We also have the GDT auction as well, so keep an eye on that, and also weekly crude oil stock data. So again, keep an eye on that in terms of the rest of the day. Now let's look at the technical picture now. Let's see exactly where we stand technically speaking. German DAX obviously is off for now. Let's have a quick look at the European 350 daily chart. As you can see here, we did get a potential shooting star type pattern. Okay, so again, potential topping pattern there yesterday, and again, it certainly is being confirmed with this bearish engulfing candle at the moment. So let's keep an eye on that. Again, let's look for a potential reversal there. Okay, so again, looking for a hanging man shooting star type pattern. Okay, it's more of a hanging man pattern, if anything. Okay, you can see a bottoming wick there, quite a large wick, and then obviously a sell-off, and then obviously a rally towards a close. Now again, we are seeing weakness follow through on there on the S&P 350. The S&P 350 has been higher highs and higher lows. I mean, what a rally. That is an impressive rally, folks. I mean, look at the pivot low from here at 1480, and now we've gone to 1580. I mean, that is phenomenal. Truly phenomenal rally, okay? That's all I can say for now. From my perspective, certainly looks exhausted, okay? Concerns over Catalonia certainly have been totally ignored. Again, very surprised at that. So with regards to Catalonia, certainly totally ignored. So again, that uncertainty has been ignored, certainly has been cast aside. Again, the markets choose not to focus on that. In terms of the actual rest of the market, let's just quickly go through it with you. Let's quickly go through to the CAC now. French CAC again indicating weakness. Daily chart at the moment, you are now coming into resistance. Now, if this rally does continue, which again I was expecting this rally to certainly fade a long time ago. Again, I've been wrong on this rally. I've been stopped out for the last 2 weeks trying to short these equities, so just make you aware. Okay, again, you are looking at gap fill at 5405 if we just continue. And again, nothing is stopping this at the moment. It's truly unstoppable at the moment. Truly unstoppable, okay, with obviously whether it's the catalyst with regards to tax reforms, whether it's a catalyst in terms of the Fed raising rates and therefore keeping the Euro USD lower at 1.17. Again, total Catalonian concerns totally ignored altogether. Look at the amount of gaps that we've left behind. It's truly phenomenal. The rally that we've witnessed here on the European equities, it's amazing. That is one hell of a rally. I mean, the pivot low was at 5,000, and now we've rallied almost 360 points. I mean, that is unbelievable. Okay, and really we've had not even a single bearish engulfing candle. Okay, not even a single retrace. It's just constant non-stop European equity rally. Okay, again, inflation data certainly coming in stronger than expected today. That again, therefore, obviously raising concerns with regards to tapering. Again, that's risk negative. Mr. Draghi has already erred on the side of obviously hawkish stance. Again, that's risk negative. So, again, finding it very hard to understand how European equities are moving higher from a fundamental perspective. Again, looking for gap fill below now. You do have gap fill at 5,350. So again, certainly hunting for that potential target in terms of the French CAC. Previous resistance equals support, so watch out there. Again, horizontal support is seen below, so watch out for those zones. Okay. In terms of the rest of the markets, let's quickly go to the Euro stocks. Let's look at the Euro stock, see exactly how that's trading. Again, daily chart is into resistance, indicating caution. 60-minute chart, from my perspective, really we're in no man's land at the moment. We do have resistance at this region here, nothing historically. Okay, certainly extremely overbought from my perspective anyway, certainly across my metrics. 10-minute chart at the moment on the Euro stocks, again you are pulling back here now, certainly giving back. Again, if you do flush, then we are looking at support back down at 3,590 and then eventually at 3,570. So watch out below, that's all I can say for now. In terms of the FTSE 100, certainly has been stellar as well. Impressive rally on the FTSE. I mean, if you look at the daily chart, look at that V-shaped rally. I mean, you had lower lows, lower highs. Okay, we broke down, we tested key support down at 7,200, and then we've just had an impressive rally. I mean, what a 250-point rally. It's just been phenomenal, truly phenomenal on the FTSE 100. Look at this rally, just coiling and bang, off we went to the races. Okay, so again, helped by the US markets, obviously QE related, or not QE related, it's tapering related, but if anything it's all about short squeezing on the back of tax reform and obviously deregulation. So that certainly is a status quo, even though Mr. Trump has failed to even pass anything so far, yet the markets certainly believe in this potential tax reform and tax cuts. Okay, so corporate tax at 20%, etc, etc. Whether or not that's going to pass, that's a totally different story altogether, but the markets don't care. Okay, certainly have pushed higher. So from my perspective, it certainly is overdone, my understanding, but again, that's my opinion, folks. My opinion is irrelevant. Okay, as a trader, your opinion is totally irrelevant. Okay, it's basically what the market believes and what the market reacts to. Okay, at the moment, my analysis was indicating the FTSE 100 should close the gap below at 7,370 and the gap at 7,320. Yet the market went totally the opposite way. It did not care one bit for my opinion. My opinion was totally worthless. Okay, and the market followed its own path, and that's what trading the market is. Okay, you put your stop losses in place. I was stopped out twice yesterday on the FTSE. One for minus 14, one for minus 15. So currently I'm short again on the FTSE 100. So you're looking for lower prices on the FTSE at present. Okay, again you're looking at 7,430, 7,425, then 7,420, and then eventually down to 7,404. Okay, so that's the status quo with regards to equities. Okay, keep an eye on there. Again, like I said, stronger inflation numbers out of Europe again will indicate the Euro USD moving higher. With the Euro USD moving higher, that will be risk negative for European equities, given the fact that it will reverse the move that's already obviously present at currently. Okay, so again, the rally that we've just seen on the back of a weaker euro certainly will be unwound. Okay, again, US dollar certainly is coming into some resistance as well, so keep an eye on that. Okay, dollar weakness certainly is expected here now on the daily chart, and therefore you are looking for strength in the Aussie, Kiwi, and the Euro USD. Okay, that's certainly a summation for European equities for today then. Please be sure to visit Trade Signals and market updates from leading providers. Goodbye now.